Welcome to the next video, which is all to do with candle patterns. The learning objectives to learn how to read candles, to identify different types of candles that are used in trading, and to identify candle patterns that indicate a possible reversal. So let's talk you through what candles are, starting with a green candle. And this is what a candle consists of. You can see in the middle part we have the real body. These are known as just the body of the candle. And the characteristics, or what makes a candle green, means that the closing price is above the opening price. So whether you're looking at 5, 15 or whatever time frame, whatever price that candle opens as, it closes above. So in that period of time, the price has gone up. Either side of this body, you will see wicks. And in future videos, we have to look at wicks because it tells a tale of what's happened in that time period. But we go mainly off the body because that is the closing and opening prices of these candles. These wicks, and you'll see when you trade more and more, there can be huge market buy, people opening big, long positions or short positions that will be trying to push the price up or down. And that is what these wicks, or these shadows, the upper and lower shadows, are. So a green candle, the price has gone up in that time period and the closing price is above the opening price. Red candle, but there's only two types of candles, red and green. So red is the opposite. The closing price is below the opening price. Again, you're still going to get these upper and lower shadows. Not always, but for some you will. But whatever this candle has started as, it is going to close lower. So now we're going into different types of candles, and there are lots. We've actually got a fantastic candlestick guide that can show you all the candle formations and patterns. I'm not going to go through them all because there's a lot we like to use, and I like to look at a handful that really gives me an understanding what is happening with the coin when I'm looking at it. So a Doji candle doesn't really have a body. As you can see here, it's very small. This therefore means that the opening and closing price are very, very similar. It can be green or red because the opening and closing price are similar. There's not much price action. There can be a lot of movement up or down, but for the opening and closing price of that candle, it's very, very similar. Now we go to a hammer candle. For a hammer candle to be a hammer candle, there should be no, or if there is, just a very, very small upper wick or upper shadow. It can be red or green. A hammer candle is a hammer candle. And the actual lower wick, the lower shadow, should be at least twice the size of the body. You can get an inverted hammer, which is just this upside down, which implies the exact same. Then we move into a bullish engulfing, where the first candle is red, so the opening price is here, closing price is here. For the next candle, the opening price is here, so it started lower than the closing price, which is obviously a bit of a signal that, okay, this price is still coming down. However, in this candle time length, it's closed above the previous opening price, which shows a real nice change of direction with this price. It is a good reversal signal. As I said, the first one red, second one green, and the green completely engulfs the red, hence the name bullish engulfing. Now we have a bullish harami or harami, depending on how you pronounce it, and it's kind of like the opposite, but it's still a very nice reversal signal. And with this, the red candle, the opening price is here, the closing price is here. And for the next candle, actually, the opening price starts inside of the previous red candle. And there's not much movement. So it just shows that this bit, having been quite a bit of a drop in price, it's now holding at this level, aka it's finding support. And this is a very good signal, reversal signal, that it will then continue back up. You can see here, this is some materials that you can get, and it's good to have and have with you when you start looking through charts and identifying candles, candle formations. We have created this for you so you can reference it and see for yourself, talking through bullish and bearish signals and also just giving you a recap of what these candles are all about. So let's go on to the charts, and again, let's just have a look through some of these candle formations or candles. So as they're all green and red, so fairly straightforward. And as you can see here, the price has come up, it's come across, it's come up. So the opening price is here, the closing price is here. Small shadows, small wicks either side. We then have, this is a green, and we have a bit of a bearish engulfing. So we have this green candle, and then the next candle is red, which engulfs the previous green, which is a bit of a bearish signal, and that the price is going to come down. What do we have here? Well, it's a very, very small body. We have wicks and shadows either side. So this is a doji candle. Then we have this body. We have a very tiny wick on top and a long wick shadow down below. So this is a hammer candle. We have another hammer candle. So a couple of these in a row is a good sign that we will be heading upwards. Big candles like this is not an inverted hammer. We have the characteristics of these big long wicks, but it's more of a doji. The closing and opening price is pretty much the same, and there's wicks either side. We have a doji here. This is like a bullish harami that we have been talking about. Price has come down, found some support at this level, and we have a huge surge up after. You know, just be aware if you're looking at like big movements like this, if there's a big red candle then a big green candle, well, just be aware depending on when you're getting in, you know, there's already been quite a big movement up in the other direction. But you can see it did imply that it just kept going up and up and up. And to finish, candles tell a story of the past. They can be used to help determine what should or could happen next. Different time periods can be used, 1 minute, 5 minutes, 3 minutes. Let me just go back on to Binance here. So you can go on to 1 minute candles, you can go on to 5, 15, 30, 1 hour, you know, all different time frames here. But in terms of the characteristics of the candle and what it implies, it doesn't matter what time frame you're looking at. For longer time lengths, if you're looking at these reversal signals, then they're going to have more of a movement. You know, for example, the hammer candle here on the 1 minute, it's still, you can see it here. It still implies the same. The price is going up after a bit of a drop, but the movement is not going to be as much as, say, like an hour candle. You got to wait until the candle has completed, and that is what I'm talking about with the opening and closing prices. So the body compared to these long wicks. We're going off the body price. So that is candle patterns. And in the next video, I'm going to be going through support, resistance, and trend lines. So I'll see you there.